Welcome to the Big Fat Real Estate Checks podcast with Marco Kozlowski, where we help investors like you get the knowledge and skills you need to replace your JOB with passive cash flow for life.
Hey everyone, welcome to Big Fat Real Estate Checks. My name is Marco Kozlowski. I'm joined with Francesco Galluccio and Gabriel Araiz. We are in different parts of the world, all joined together today to go into what might be the last installment of a mini-series on the economy, the slowing down of the economy, higher interest debt. I don't know why I couldn't say that in one word. Higher interest debt that's now hitting the market with the Fed increasing the prime rate significantly, mirroring what could happen in the 80s. Our crystal ball is broken. Many are frightened by what's about to happen, and we're delighted. Not because anyone's going to get hurt, but because there's an opportunity to cash in on that market cycle if you know what you're doing, and of course action on that as well. Just like we've done in a previous podcast, everyone can do this, but not everyone will. And just because you know how to do something doesn't mean you're actually going to get it done. If your motivations are strong enough and your why is big enough, you will do whatever it takes to be successful. And if there's not a lot of pain in your life, you don't really care, not a lot of action is generally taken. So that's that. So if you have not listened to the first 10 episodes, it describes that you don't need money to make money. In fact, we use asset-based lenders in order to buy many of our assets. And we also do debt takeovers, which is probably 80% of how we buy properties these days. And specifically now with this shift in the economy, shift in the prime rate, in the hike in interest. Very exciting time for us because we know exactly what to do, how to do it, and you can make a shit ton of money. In fact, this is the cycle that I started my journey with in real estate, very close to it, and made a lot of money in a very short period of time. And we can get into some of those strategies and techniques. And as a listener, if you're listening, I suggest you sharpen your ears right now because there's going to be some really neat things that are going to be done. Now, I do want to disclose that I'm going to be more on the generalities and the specifics. It would be irresponsible of me to give you something that could hurt you or others. So any information that I give, I want to be able to monitor closely so you understand, A, the power that you're wielding and how it can really hurt and impact someone else's life negatively if it's not used correctly. And if I just shoot out information just to shoot it out because it makes me look cool, it actually could be very dangerous to other people, and I refuse to do that. I've already made those mistakes early on in my life, and I refuse to do anything that's not going to be used for good and used responsibly and wisely. So I just want to disclose that first because you really can really make a big bruise in someone's life if you don't do this correctly, because you're playing with someone's credit and life when you're doing these kinds of things of debt takeover and basically making promise to someone that you might not be able to keep because of a lack of knowledge and understanding of how this whole process works. So now that that's out of the way and my conscience is clean as it can be anyway, let's get into some opportunities. Let's first set the scene. Frank, you're going to be the seller. You bought this property a few years ago. You have a 2% mortgage. We've discussed life cycles of mortgages, 3 trimesters. First trimester is all interest, meaning that let's say 5 years ago you bought this property. And how much do you think you've paid off of that property in the last 5 years?
5 years? Not much.
Paying monthly payments for yes.
Yeah.
Almost nothing, right? So you still almost owe the same thing. And because there are fewer buyers and you want to sell this property quickly, I don't know, you're going through something in your life where you really need to sell. All the equity that's been gained in the last 5 years, as the market slows and slows and slows and slows, and as more people in your area want to sell or need to sell, eroding the equity that you've created, you might be in a position. In fact, this is going to happen where there's very little equity left based on what you owe. If you some people gotten a 90% loan. Right? So if you've borrowed 90% at a very low interest rate, which was very possible 5 years ago, that 10% equity is...
Listen, a lot of people over-leveraged over the last half a decade, for sure. So yeah, people got into 95% on low interest. So, but they also overpaid too over the 5 years. So, okay, so I'm the seller. I'm trying to sell my house. Got 2% interest mortgage loan. I want out
You want out.
Yeah.
And so he calls a real estate agent, and because of the erosion of the equity that's been there, agent says, well, you basically are going to have to write a check to get rid of this thing.
including his commission.
Or even make nothing. Well, you could just.
No, or make nothing. Or there's no wiggle room on the price because it just covers commissions, closing costs, and everything else, right? So, or there's like 10 grand left, 20 grand left, whatever the number is, right? So there's not a lot left. There's not a lot of meat on the bone after commissions, because commissions, closing costs alone could be, significant.
100%.
Especially when you have
it'd be
equity.
2-3% of the purchase price. So yeah. So if there's $10,000 left, there's nothing actually. In fact, I don't think I'll have enough money to pay commission and closing costs.
Well, let's say you're at 8%, 8-9% on $1 million. That's 100,000, 90 grand there. So anyway, so there's not a lot of meat on the bone, and you need out, but you have a 2% interest rate, and you've been paying this thing for 5 years on let's say a 20-year mortgage. Okay, so now what? I'm living out of my car. I'm completely living out of my car, and the value of the property is, you basically owe 90% of its value, and you have a very low payment. Now, I couldn't afford to necessarily step in to buy my own house because this is. I've always purchased my houses.
Oh, there he is. He's back.
You froze a little bit.
You went back in time.
Really? Ooh. It says my internet connection is unstable.
The whole economy's
That's
unstable.
the only thing that's unstable.
Well, it's the theme of the day, instability. So let's roll with it.
You're in your car. You have nothing
with this. I don't have anything. So it's not like an upgrade. My own. I couldn't afford to live in it. Now, if I could, that would be great. If it was a property that I wanted to buy, which is what I've been. Gabe is poised, and so am I. I'm marketing to assets that are anywhere between 5 and 10 million that I can step into the debt, and this is a great time to step into somebody else's debt and just upgrade your property. However, let's say I'm living out of my car and Frank needs to sell. He needs out. I don't have any money. Frank just wants to get out, and I've positioned myself where Frank contacts me. I'm not contacting him, and Frank says, I have a problem. I got to get out. And his low monthly payments actually there's some juice in there to actually rent it out or even do a lease option, which is, Frank, you're very familiar with lease options. So you can, I think we have an episode on this already. Yeah. Where you lease the property with the option to buy and you get a down payment, a downstroke that is, significant. So that could put, a couple shekels in your pocket very quickly. So which is how I got started, is I talked to someone like Frank. I negotiate the terms. I put it under contract under specific terms. And while it's under contract, I go find a renter or a lease option buyer and I make the spread. And that's it. I can actually take over his debt, and using the right tools and the right disclosures that we're not going to be providing on this podcast at all, unless I actually have a class on how to do this responsibly, and the conversations that are necessary, the disclosures that are necessary, and the impasse that is necessary in order to really keep control of this. So technically, if I can rent this out or lease option it out for $1,000 more than what the payment is, which generally at that low of an interest payment isn't that uncommon, I could make $1,000 a month forever with first, last, and security before I even have to make my first payment to Frank. In fact, I could ask Frank to make the next 3 payments before I even start making the mortgage, which I've always done. If I'm taking over someone's payments, you make the next 3 and I'll make the rest. And if I get a tenant right away, every single one of those payments goes into my pocket.
Yeah, and plus on the lease option,
and
you get typically a down payment right before they come in with the option to buy. It's like a down payment that goes towards the purchase price in the end. So you're making money on the first 3 months if you structure it that way, plus the down payment that you are getting, and you're securing your tenancy for the next 2-3 years for that, for those individuals to purchase the property. That's why you give them the option.
And they're paying the taxes, the insurance, maintenance. They have to, like everything's paid. You're still making a profit. And
yeah, well, a lease option, you're just basically postponing a sale date. You have a predetermined sale price, and you're postponing the sale date for a year, 2 years, or even 3 years, or even longer for that matter. But typically 2 to 3 years.
Right. And And if they don't buy it, then you sell it again. And then if they don't buy it, sell it again. I've sold the same property 3 times. So, yep. Gabe.
I mean, the example is very clear. I mean, you can also use this, like you said, for if you do have, the cash flow in order to live in the place, then you can do the same thing, where the payments on the debt are much lower than they would be if you got a new loan at the current interest rates at that amount. And if the payments are interesting and they fall within the parameters of what you're looking for, you can actually get a lot more house for the same money, if you will, for the same payment. And that's an opportunity for you to step into that debt and to step into those payments for yourself in terms of a homeowner. And at that point, you might be able to get in for very little cash as well, or maybe no cash. All that. These are all opportunities that are going to be available, but you got to know what you're doing first, and understanding that, first of all, that stepping into someone's debt is 1, legal, 2, possible, and 3, around the corner. Those are all things that are going to be very important for you to know if you want to move forward and either get involved from a homeownership perspective or from an investment perspective, as the lease option, scenario was described.
Or both, or owner financing terms, or doing a wrap where you're getting the property at 2% and then you're doing a mortgage at 7.5.
Yeah, that's a good point.
Or 7.
Because I remember the last episode, and if you didn't listen to the last couple episodes, maybe you should before you complete this one. But you can.
I have to listen to that before I
step into the. You can step into the debt, and to do that, you don't need any money or credit, typically. So. If you can step into debt and do that without using your credit or qualifying for the loan, then how many times can you or would you want to do that when presented with the opportunity?
Well, and depending on how it's structured, it can be a liability, which is when you live in it, you're ruining a perfectly good deal because the cash flow is coming out of your pocket. But if you do enough of these with the cash flow to sustain it while you're looking for your home, which is exactly what I'm in the process of doing now, while I'm looking for the right asset, I'm cherry picking which ones I'm going to make money on and which ones I want to which one I can't live in ones that I want to spend most of my time in. So you can, but that's a pain in the ass. It is. It's like having 2 wives. Just could you imagine 2 people? Having 2 people telling you what to do all day long. Very difficult. Anyway, that's the story for another day. But yeah, so it's you can generate income while you're looking for the right asset, and when you find the right asset that you want to live in, all the other assets that you've made money on will actually pay for that one. So you're technically living for free. That's why education is always free. You always make money on education because the more you know, the more you earn. And yes, as to echo what Gabe said, 100% legal. Line item 203 in a HUD is taking over debt subject to the existing financing on a federal document. That is a federal document that is there. So it's definitely legal. Most people don't know how it's done. The mechanics of how to do it are thanks to the Garn-St. Germain Act of 1982, which we've discussed in a past episode, and understanding why a seller would basically hand over the keys to their property while the debt is still in their name is an art form. There's a lot of conversations that have to have and an impasse that needs to be had in order for a seller to be excited to throw the keys to you and say, here's some equity in the asset. I don't care. I'm out. Bye. Takes a little bit of, and that's the art of what we teach.
Yeah, it's an articulated art to get to that point. Because if you just go talk to a seller, just say you came to me, Marco, and said, you know what, I'll just take over your debt.
Oh my gosh.
I'll give you a little bit of your equity if you do have any, and you walk away. I'm going to say fuck off, basically. Because again, a lot of people, even from a seller's perspective, they're not educated on this. Because again, they still have the same bias and the same belief that they're like, what?
Exactly.
You can't do that shit. You're a scammer. That's it. They're going to think you're some, someone out to get them or whatever. And they're going to put their guards up and be very skeptical. So it is articulated through a process that that Marco put together, but it's done delicately because the other person, someone like a seller like myself, may not know. So you got to add some clarity in there and some certainty for them to agree to that.
And
and the more
I was just going to say, the seller actually, you're really helping them out because in the current environment, if someone was going to buy this traditionally, they may offer them a lot less for their property, whereas you're willing to step into the payments, which the loan amount will be higher than the purchase price would be for a traditional buyer. So they're actually, getting out of this without it getting hurt, both financially and from a credit standpoint. So if you know what you're doing.
If you know what you're doing.
Exactly. And so,
and you can destroy them financially if you don't know what you're doing. That's why I'm over disclosing that. I really want to hold your hand on the first one or second one, if that's something that you're really interested in. There's a lot of money to be made. Sorry, Frank.
And for the record, he does the same with us. I mean, he has to hold our hand from the first or second time we did this. So this is all part of the process. But yes, all I'm saying is that this strategy is good for you, but when done correctly, it's also really good for the seller. They actually benefit, but they have to understand that before they're willing to go through with it.
Absolutely. And we haven't even gone into the multiple ways that you can profit from taking over someone's debt. Wraparound mortgages, second mortgages, selling on owner financing with, ghost second mortgages. There's so many things that you can do. And as the asset classes are bigger, you make a lot more money. So doing something like this on a $5 million asset makes you easily, you have $1 million in your pocket the day of closing is not unusual. So but the techniques are very different. There's no Garn St. Germain Act on commercial properties, as I said in the last episode. So, and I've had to really discover this through trial and error, and I mean painful trial and error. And the only reason that I'm qualified to do this is because I've made the mistakes necessary in order to learn how to do it correctly without losing the farm. And I've had to lose the farm many times in order to figure this out. And I just too stupid to quit, and too hard-headed to not make it work. And and now you can benefit from that if this is something that you really want to learn and profit from, specifically now in this economic cycle at the beginning of it, right? You want to get into things at the beginning of it, because those that follow up will have the most amount of impact on people. People will not like the idea at first, but as you're connecting with the seller, let's say Frank says, fuck off on the first point of contact, 30 days from now, he says, fuck off. Now 90 days has gone by and he really needs the money. He's now humping my leg, thanking me for the solution that I presented him 90 days ago. He wasn't ready. When the student is ready, the teacher will always appear. So it's having those right conversations, seeding those right conversations that get done over time. Deals are created. They're not made instantly. So remember that. It's a process. And understanding that process and following process will allow you to make a tremendous amount of money in a very short period of time, as long as you do it responsibly. So that's that. Appreciate you boys. Listener as well. Like us, love us, share us. Please subscribe. Leave a review. We always love to hear feedback. Send us an email. Marco@marcokozlowski.com is my email. Any topic that you would like us to discuss, be delighted to do it. And any tools or any really systems or processes that we can share or that you're not clear on, please let us know so we can really share this. And we're at almost 200 episodes, creeping towards it. We're closer to 200 than we are at 150. Or 100, I should say. And there's still a lot to learn for all of us. We're still always learning every single day. Gabe, I don't know if you want to say something real quick. The way you're, no, okay, you're just scratching your arm in a way where I can read your body language. So I appreciate you. And for those that can't see Gabe, he's a hell of a guy. We appreciate you guys. Thanks so much. Have a great day, and crush it, and take advantage of the opportunities that are here now. Don't worry about what happened in the past. Focus on the future. You're going to do great. Bye for now.
If you like this episode of Big Fat Real Estate Checks, then show some love by leaving a comment and a good rating. Also, as a thank you for tuning in today, we've got a special free gift. The journey to passive cash flow for life starts by finding deals, and it's easier than you think. Simply go to getdealsbytuesday.com, enter your email address, and we'll send you a free quick start course called Deals by Tuesday. Even if it's 11 p.m. Monday night, this course will show you how to find discounted real estate deals by Tuesday. It's that fast and simple. Go to getdealsbytuesday.com and start your journey toward life-changing cash flow today. Thanks for tuning in, and we'll see you on the next episode.